And in our top business story, global ratings agency Moody's Investor Service has confirmed a AA2 long-term issuer rating for the UAE government. The agency stated that the key driver is Abu Dhabi's very large fiscal buffers in the form of diversified offshore investments, which will support the UAE's economic and fiscal resilience during a period of lower oil prices and subdued growth. The UAE's long-term and short-term foreign currency bond and deposit ceilings remain unchanged at AA2 and Prime 1 respectively. The UAE's long-term local currency bond and deposit ceilings also remain unchanged at AA2. Moody's noted that the UAE's general government's debt to GDP ratio is low at around 18% of GDP in 2015 and is expected to remain moderate. The agency also said that there has been a significant improvement in the leverage position of Abu Dhabi government-related entities, while the debt of Dubai government-owned entities has remained stable. The ratings agency expects that the UAE's strong fiscal reserves will remain above 130% of the country's GDP over the next few years. The UAE's large non-oil economy has diversified and is expected to benefit from renewed investment ahead of the Dubai World Expo 2020, while Abu Dhabi's offshore investments offer resilience to lower oil prices. The agency has, however, assigned a negative outlook to the ratings, a decision that it says reflects uncertainty around the content and implementation of policy responses to the oil price decline. It added that the UAE's real GDP growth rate remained robust last year at an estimated 3.4%, down from 4% in 2014. Meanwhile, the agency cut its debt ratings for Saudi Arabia, Oman and Bahrain as it said that low oil prices undermine these government finances. The ratings agency downgraded Saudi Arabia's long-term issuer rating by 1 notch to A1, but gave the kingdom a stable outlook. Oman was downgraded by 1 notch to Baa1 with a stable outlook, while Bahrain was also cut by 1 notch to Ba2 with a negative outlook, as both countries lack the huge financial and oil reserves of their neighbours. Moodys confirmed the AA2 ratings of Kuwait and Qatar, but gave both of them a negative outlook. Arabtec has reported a rise in revenues to 1.9 billion dirhams in the first quarter of the year, up from 1.79 from Q1 last year. The Dubai-based company also saw a net loss of 46.4 million dirhams for Q1, marking an improvement from the 140.5 million in losses recorded in the same quarter in 2015. Meanwhile, the company's costs recorded a drop to 1.89 billion dirhams in the quarter, down from 1.9 billion in Q1 2015. The figures come as Arabtec's chairman said that last month he expected the company to break even this year and also return to profit in 2017. Sharjah-based Tilal Properties has dedicated land to build 6 community mosques at its 2.4 billion dirham Tilal City project with a capacity for 4,100 worshippers. The Friday Mosque will be built at the heart of the development in Zone A. The development will comprise of 1,855 land plots and offers the opportunity to UAE residents as well as GCC nationals to buy or lease land and develop properties in the Emirate for the first time. The mosques will be built in consultation with the Sharjah Department of Islamic Affairs and the Sharjah Awqaf General Trust. Haysam Jazeri, the Business Development Executive Director at Tilal Properties, said that we are confident that the overall strategic master plan will ensure a huge demand both for rentals and sales, delivering high returns to land investors. The development will boast 11 educational facilities, including schools and early development centres for children, as well as leisure centres, healthcare facilities and civil defence stations.